Hello, my name is Nick Quinn.
Hi, I'm Connor Woods.
Hello, I'm Shane Vernier, and we're the market analyst team at howtotrade.com. Together, we'll explain everything you need to know about trading the double top pattern. All right, let's get started.
A double top is a chart pattern that has two tops to it. It's considered a bearish reversal pattern as the market probes a level of resistance and fails to breach it on the second attempt. They're commonly found at the end of an uptrend, and quite often we see slowing momentum as the market makes that second attempt. It has a distinctive shape and it looks just like the letter M. So let's break down exactly how we'd go about identifying it. A double top is a very common, easy pattern to spot on a price chart, and there's a few simple techniques that we can employ to help identify it correctly. Firstly, we're obviously looking for an uptrend, and we're looking for the high point that has been created. From here, as the market starts to rotate back down, what we're searching for is the market to attempt to make a higher high, but fail to do so. Once it starts to do that, we can draw in our first level of resistance right across the top like that. Now, from here, as the market then starts to trend down, we're looking for it to breach the swing low point between the two highs. So what that basically means is if we've got one high here and a second high here, whatever the swing point is, the swing low point is between those two highs, that is the level that we're looking to act as a gauge for whether we should enter into a short trade from there. So what we would do is we draw our next level of support around just under that low there, and even stronger if we can connect it with a support structure within the trend that took us to the high in the first place. Now, once the market has come down to that level, we're looking for a breach lower to enter short. So we search for a candle that breaches that level to the downside, a bearish candle. And at the close of that candle, that is where we would look to get short. So you get short at the close there, and then it becomes a question of trying to figure out where we should place a stop. Well, there's a few different ways of looking at that. One way you could do that would be to be very aggressive and place your stop on just above the trend line. Another way would be to place your stop over the candle high that breached the level itself. Or even more conservative would be to use the trend structure that's been created as we've come back down to test the level, and that would be to use a stop loss placement just above there. So there's three different ways of placing a stop, but there's a very clear structure on how to correctly identify a double top.
So much like the double bottom pattern, the double top pattern is mostly used to identify a trend reversal at the end of a previous trend. And in this example, we're going to see how the double top pattern can be used to form the end of an uptrend and signal the beginning of a new bearish trend. Now, as you can see on the chart right now, we're generally trading in a bullish direction. Now, what you can see here is we're looking for that M formation. With the double bottom, it was the W formation. With the double top, it's the M. So we mark our two highs here, and this to us, we've got the baseline of the M, we've got the two highs, and then we've got this neckline here. And you can see that those double tops have indicated there's potentially a change in trend. Now we want to wait for this breakout candle here, and as soon as we get a break below this neckline of this M formation, that to us is a signal that the market is changing trend. And you can see that breakout candle just here. You can see that one there and this one here, and you can see after that we generally started trading to the downside, and we had that change in momentum. And the second way you can use a double top pattern is to identify it in a ranging market. Now it is trickier to find this because in many cases double top pattern could be formed and bounce back again to trade around the resistance level, and that creates a triple top pattern. Nevertheless, we can see the market at the moment on the chart trending sideways. We're in this ranging market, and if we add the drawings on there right now, it's really clear what we can see. We can see this market trending sideways. We've created high number one and high number two. We've got that M formation, and to us we want to see that break below the neckline of this M formation to confirm to us that the bearish momentum is in place. Now you can see here, which is where we have our breakout candle below this low, below this neckline, and from there we can see the market move significantly to the downside and have that change in trend.
Okay, let's go through a few of the key pros and cons for the double top pattern. On the pros side, when using the double top reversal pattern, there's a high probability that the next bearish trend will be long and sustainable when price breaks below the neckline. Number two, the pattern can be seen in multiple chart time frames, so it's commonly occurring across all markets on all time frames. Lastly, it can be identified in both trending and ranging markets. So whether a market is flat or directional, the double top pattern may or may not be present. Now, on the con side, in some cases, the double top pattern can become a triple top pattern and a stop loss will be triggered. In these instances, it provides a false signal as the double top becomes a triple top. Lastly, using the double top pattern trading strategy is more suited for day traders rather than long-term investors. So the double top is more designed for daily and intraday traders. Now, let's review some of the key takeaways from the double top pattern. Number one, the double top pattern is a bullish reversal formation that looks like the capital letter M. Number two, the double top pattern has three elements: a first high, a second high, and a neckline. Number three, the double top formation is most effective at the end of a strong uptrend. Number four, it is important to confirm the pattern with other technical analysis tools, such as RSI or Fibonacci retracements. Now, if you want to learn more about the double top pattern, be sure to check out the How to Trade Trading Academy inside our trading room. There, you'll find a longer form tutorial where we'll show you exactly how to fit the double top pattern into your own trading methodology. We'll then demonstrate how to take that plan and trade it against real market price action. You'll have everything you need to practice and gain experience. And once you're ready, you can join our How to Trade Funded Trader program.